Hey, so I'm back looking at the euro yen again. Price is traveling up just the way that we would have liked it. If I look over here on the daily chart, well, this is just a beautiful morning star. We got these wicks getting thrown. The candles to the left and the right are just like symmetrically coming around. Also, price action is trending cycle lower on price action, where moving average convergence is trending cycle higher. That's called a positive divergence, and that is a good indicator that price is going to be turning around. We have swing high being broken here, which changes market flow. This candle right here, price action broke above that candle, and that changed the market flow, so we're also in a good position. I already got into the market here. The price dipped back enough for me to just consider getting in. Stochastics were pretty low in the range on the 15-minute chart. I just got in. Price traveled higher. Interesting thing is happening right now, and this is something that a lot of people might come across in their trading. Price is moving into a previous previous support turn resistance. If you look over here on the 4-hour chart, price action is just engaging moving average line here, but it's also this swing low was a previous support, and now it's a resistance. So I'm in the market, I'm in the trade. If I wasn't in the trade, I might even consider a counter trend scalp here, because I like the way stochastics are topped out on the 1-hour and the 15-minute chart. Price is engaging previous support here, which makes it resistance here. And, this candlestick formation is showing a little bit of uncertainty in the market. So if I wasn't in the market, I would at least think about taking a short scalp here. But because I am in the market, and because that's against my position that I have to consider a couple of things. I can either put in a better than break-even stop loss on this trade, which I don't have a lot of room in the trade yet to justify it, and it's probably like 40 pips, and price could totally come all the way back down and take out my stop, and that would be unfortunate. But I don't want to lose any money now that I'm in profit. We want to stay there. We don't ever want to have a winning trade turning into a losing trade. That is just something you don't ever want to happen. So as I look at this, it could it could turn around and threaten me a little bit. The other option I have is I could just take profit now and then wait for this to unwind a little bit and then get back in. It could also just totally bust through it, and I'm left with 40 pips out of 100 and something pip trade that I could have had. So this is where trading can start to mess with your psychology. What do? Nothing is really a completely bad choice other than just letting the market run its course and taking a loss out of a winning trade. But we do want to refine our skills for winning. So I think that what I'm going to do on this, because I got these confirmation indicators on the daily chart and on the 4-hour chart, I think that I'm going to put my stop loss in, and considering that I probably want to stay in this trade for a number of days yet, I'm going to put my stop loss in just above break even, so that I'll take 3 or 4 or 5 pips if price does go that direction, and if price continues to go north, then I've got a stop in and I can let this run. So I'm just going to attach a stop to the trade right here, and I got it's got to be less than 128. So 127, let's call it 127.70. I think there's got to be a better way to do this. So I'm just going to put that in, and if price does take me out, I will just look for opportunities to get back in. But that's how I'm going to manage the trade for today. But I just wanted to mention what it looks like when you're getting opposite indicators from the higher time frames to the lower time frames, and how you manage that. So that's all for this trade. Have fun.